Mr. President, to conduct some business, I have 6 unanimous consent requests for committees to meet during today's session of the Senate. They have the approval of the majority and minority leaders, and I ask unanimous consent that these requests be agreed to and that the requests be printed in the record.
Without objection.
Thank you, Mr. President. I've come to the floor today to speak in support of President Obama's nomination of Richard Cordray from Ohio to be the director of the Consumer Financial Protection Bureau. He's a former Attorney General, former Solicitor General, and former State Treasurer of Ohio. He is unquestionably well qualified to take on the position for which he's been nominated. Unfortunately, we're stuck in a Republican filibuster of Mr. Cordray's nomination. Sometimes there's a hidden ulterior motive around here. In this case, there is a stated ulterior motive to weaken the new agency's power to protect consumers. Republican obstruction of Mr. Cordray's nomination has nothing to do with Mr. Cordray himself. Former Republican Senator and current Ohio Attorney General Mike DeWine has called Mr. Cordray very well qualified for this job. And just last month, 8 Republican Attorney General colleagues of his joined 29 Democratic Attorneys General in writing to leaders Reid and McConnell with their support for Mr. Cordray's nomination. Mr. Cordray has been endorsed by groups as varied as the AFL-CIO, the Credit Union National Association, the National Fraternal Order of Police, and the AARP. But notwithstanding widespread bipartisan support on Main Street, Senate Republicans are seeking to prevent Mr. Cordray from taking office as a service to Wall Street. As one Republican member of the Senate Banking Committee said, I quote, "My colleagues and I stand by our pledge that no nominee to head the CFPB will be confirmed by the U.S. Senate, regardless of party affiliation, without basic changes to the Bureau's structure." So what are these basic changes? The basic changes that the Republicans have demanded include making the agency subject to the budgetary influences of Congress, which, given the way Congress is behaving, is a way of allowing the influences of Wall Street to come through and to control it, and also replacing the director's position with a board that would ensure that Wall Street is represented. These are not constructive changes. These are an attempt to weaken a regulator designed to protect consumers. I hope that my Republican colleagues will reevaluate their filibuster of Mr. Cordray's nomination. But in the event that they don't, let's just take a moment to review the consequences here for the American people. As many of our constituents know in Rhode Island and in Minnesota, we established the CFPB in the Wall Street Reform and Consumer Protection Act as a new agency to protect American consumers from misleading and potentially ruinous financial products. After the subprime mortgage catastrophe, the logic behind that is pretty clear. We designed this new agency to be for mortgages, credit cards, student loans, debt collection, credit reporting, what the Consumer Product Safety Commission is for toaster ovens, toys, baby strollers, batteries, and swimming pools. Harvard Law professor Elizabeth Warren first proposed such an agency, and I was very proud to co-sponsor Senator Durbin's original Financial Product Safety Commission Act of 2009, which was the first bill to bring Professor Warren's idea here to the Senate. We designed the CFPB to investigate consumer financial products and gave it the power to make rules, ensuring that financial products are transparent and fair, including, for the first time, providing federal oversight of previously unregulated loans and financial services from non-bank financial institutions. Those institutions are often the ones that get regular Americans in deep and unexpected trouble because of tricks and traps in those contracts. When you look at the length and the amount of fine print of consumer contracts, when you look at the extent to which different traps and tricks get hidden in all that fine print in order to catch consumers in things they weren't aware of and wouldn't accept if they had been aware of them, the reason for this oversight is obvious to most Americans. Indeed, it is my contention that Americans in today's society are the most bedeviled group of humans in history by fine print. Everywhere you go, you find fine print filled with tricks and traps that fool you, that kick up your interest rate, that give away rights that you have. So what we want is a little bit of a fair shot and a straight deal for the American consumer. Under the temporary direction of the Treasury Secretary, the Consumer Financial Protection Bureau is actually already up and running, and it is regulating now the largest banks in the country, those with over $10 billion in assets, as well as credit unions. Unfortunately, its authority to protect consumers from these other financial products is unclear until there is a director, which may be another motive for blocking a director. So the Consumer Financial Protection Board is already out there looking out for American consumers, out there to make sure that big banks and credit unions are playing by fair rules, but it has not yet been able to regulate the non-bank companies like mortgage servicers, the private student loan lenders, debt collectors, payday lenders, and credit reporting agencies. While the Senate Republicans filibuster this nominee, this very qualified nominee, indisputably qualified nominee, some of the worst financial actors in the country remain unaccountable for their deceptive and harmful practices. Predatory lenders near military bases continue to charge our service members effective interest rates of up to 800%. Private student lenders continue to withhold clear information about repayment terms to young students taking out these loans. Debt collectors continue to bully and harass those who are on the edge of bankruptcy. And so-called payday lenders continue to dupe senior citizens into taking out loans bearing triple-digit interest rates. This is the status quo that Senate Republicans are preserving by blocking Mr. Cordray's nomination. Consumer protection against these kinds of practices should not be a partisan issue. And I really hope that our colleagues across the aisle at least allow us to have an up or down vote on this nomination. Majority rules, let's have the vote, let's go. Every day that Republicans continue their obstruction, Americans from all walks of life, from students and senior citizens to our men and women in uniform, will continue to be subject to unchecked and unregulated deceptive financial products. They will continue to be prey for predatory loan instruments. Abusive lending practices strip wealth from communities and purchasing power from consumers in ways that continue to hold back our struggling economy. Let's confirm Mr. Cordray so that he can begin the hard work of leveling the playing field for the American consumer and help ordinary Americans get a straight deal in our increasingly complex economy. I hope we'll be able to do that. I thank the chair and I yield the floor. I would note the absence of a quorum.